Hear ye, come one, come all to my aspiring, future winning traders in this world and all my good friends out there at XM. And welcome to all the social media viewers from around the globe. We are so thankful to have you here at XM. My name is Doug Rumor. If you've never seen me before, don't know who I am, let me introduce myself. 25 years in the game. Trading is what I do. So I'm here to do whatever I can throughout these sessions. We do these all the time, by the way, at XM. Every day the market's open. We're here live talking about trades, talking about setups, talking about the basics. We have two different kinds of rooms. If you take a look at the very top of the screen there, you'll see a beginner room, you'll see an advanced room. We have debates, everything that you need to know to get you from point A to point B to become a successful trader. So over the next 60 minutes, that's what I'm going to do. Now, first and foremost, this is the reversal trading session. I'm already tongue-tied. I'm so excited about Thriving Thursday. We're going to talk about these markets, and I'm going to start out by saying, man, I tell you what, the heat is on. This has got to be one of the biggest rallies, consistent rallies, I should say, in quite some time, to try to put that into perspective. Now, a lot of people remember one of the most bullish years ever in markets was definitely from the base of COVID when the U.S. government was at zero. Remember, we were at zero. The Fed cut the rates, gave a bunch of free money to everybody. Meme stocks like GameStop and AMC and all this stuff was flying. Cryptocurrencies were flying. Even back then, from 2020 to 2021, which is one of the bigger rallies in terms of percentages. Here's the US 500 chart. I'll show you what I'm talking about. From this space at the very bottom of this chart is when the capitulation point came from from COVID to that is one of the biggest rallies ever. And to put this into perspective, you'll see where I'm going here, guys. This is about a 100% move in US markets. Now, while this isn't percent wise, to put what we're seeing right here into perspective, let me get the percentage tool out here. From the base of just October, it hasn't been that long. We are standing right now at about a 15% rally. Now, here's what's different here. This is, if you look at a weekly chart, get a load of this. Uh, 7 straight weeks of gains. We haven't had 7 straight weeks of gains. You got to go back several years, not even through COVID, through all of that bullish time, did we see 7 straight weeks of gains. So this is a monstrous rally in terms of percentages, but also in consistency that it's been 7 weeks and the market hardly ever does that. Maybe 4 or 5 times in history. That's pretty powerful. So if any of you just had come into trading, what you're seeing is, let's say, not normal. That's not a normal function of a market, but it is what it is. Why I'm bringing this up and why I'm going with this is something that everyone has to understand when they're just trading or we're talking about reversal trading. One of the things when it comes to reversal trading that you must understand, my good friend Boyke's here. I know Boyke understands this. You cannot buy something because it is oversold, right? That can't be the reason. Because you look back here, it almost went like 7 weeks down, right? You can't just buy something because it's down too much or because it's up too much, because you never know how far something may end up going. And this is a classic case of that. First of all, when the bounce was made off of the bottom, when you had the signals here, people could have denied the rally. They began to short very early, saying that this was just a fraudulent rally, that this was going to end up being the case where you just had this bullish reaction and then the market went down and expected it to go down again. You can never underestimate how irrational a market is going to be. So one losing game for all traders is try to mentally pick a top and mentally pick a bottom. And that's what I want to spend a good piece of this session talking about, because everybody's going to encounter something where and here's why. I'll back up for just a second. You are putting in hours of research and you're looking at indicators, maybe an RSI, overbought, oversold indicator. Maybe you're using a moving average cross. Maybe you're looking at, I don't know, a MACD or something, whatever you're going to throw against this in terms of technical indicators. is going to read overbought. And it probably read overbought about 3 weeks ago, right? And overbought can always become more overbought. Oversold can always become more oversold. So in these sessions for reversal trading, we want to focus on how do you know when this is over with, right? How do you know where the bottom was there and that was the time to buy? And at some point throughout our human history, from now until the end of time, this in fact will sell off, right? We know that. That's going to, it maybe not the whole thing, but it's going to sell. There will be a period of 2, maybe 3 weeks of consistent selling. It always works that way. It's worked that way ever since the market has been open in the 1930s up to now. So we kind of know that's going to happen. What we all do as shorter term traders is timing is everything that we have. Knowing that something is going to happen is kind of easy, I think. Like you know it's going to be sold. When? Oh wow. And you can blow an account trying to get in here too early, right? So that's what we'll discuss throughout the rest of the time. But what an amazing rally. Probably is a little bit long in the tooth. This is the US 500. Um, I have to really dig deep in my brain to go back and to think of a moment. Let's see. I'm going to bring up the Dow Jones, which is the US 30. You got to. I mean, this is looks like something. This is like a meme stock, right, Boyke? Get a load of that. That is like the most parabolic run. I mean, this one was pretty good here back in this area, right? This rally, and of course this sell-off, right? And for those that are new here, let me just highlight something on the chart. You're going to find this with every chart. I don't care if we're talking about gold, we're talking about the euro, or we're talking about bitcoins, we're talking about markets and stocks and all that kind of good stuff. Every one of these massive rallies that you see in anything, you always go back to the origin and where does it come from? Why are we talking about reversal trading in the first place? Where did this sell-off actually begin? Right there. Where did this rally begin? Right there. It came right off of a massive sell-off, right? This sell-off came after a massive rally, right? Big rally, big sell-off. Big rally, sell-off. That wasn't that so big. Big rally, big sell-off, big rally, big. There will be a big sell-off, right? But again, always remember this no matter where you go with your trading, wherever your journey may take you for the new people listening here via YouTube. Never underestimate how far it can go, right? You know that time will come, but you have to be cautious. Now, a lot of this here to get into a little more detail was Fed meeting yesterday. They remained. There's not going to be any more rate cuts. I mean, excuse me, rate hikes. So they didn't do any rate hikes and said they forecast three rate cuts in 2024. Market loves that. It's a bulls on parade here, and that may continue. You're in Christmas. You normally get a Santa rally. Uh, this could get still a little bit out of hand. But what we want to do, and where I'm going with this, is we want to start looking for the signs of a reversal. We want to start looking for the moments where now you've gotten ahead of yourself. The news is out. There's no more catalyst. When will the market decide to sell this? How will they reposition? Now it's going to happen because prices will always drive themselves up to where everybody looks at it and says this is too much. And if this is a first time entry into a market, it is overbought. It is a very steep price to pay. And throughout this session, that's exactly what we're going to talk about. But what a big move. Now, shows you kind of where the market's thinking is. The Fed said they'd probably raise a few times, and the market still bought stocks, still bought stuff, right? And then they turn around and say they're going to cut, and the market just really got excited about that. So, what would we look for? What would we want to see? First, you're going to have to give back something here in terms of percentages before that can even be discussed. Like you would have to probably give back at least 3%. So that is somewhere down in this range, retesting this base over the last four. This is a daily chart. So it's 1, 2, 3, 4. We're on our fifth day. So probably just coming back into this zone right here. And remember, contrary to popular belief, and if we're going to run out of time here for the YouTubers, I encourage you to join our session here for the rest of the hour. But just in case you don't, when, when you want to see this, the answers are always to the left side of your chart. They're always over there. What happened before? What were these signals in the past charts, and how did it reverse? Now, it doesn't have to follow the same format, but there are clues that we want to look at. Now, if you take a piece back here, and this is normally how a market works and what we want to understand. Markets normally do not go. In fact, no market has ever crashed in the terms of the word crash from all-time highs. That's never happened. It won't happen again. It's a process that goes through a series, and then eventually there's this massive sell-off. But there's always sort of a warm-up to that massive sell-off. Same way as there's always a warm-up to the rally. There's always a forecasted move that a market makes to tell you that's probably what's going to happen here, and we want to look at it. So as you look at a moment from this piece to this piece, drawing a typical trend line, you see that the market went down. But take a look at how that market went down. It wasn't straight. It wasn't just a straight shot. Like, you're probably not going to get 7 straight weeks of a sell-off here, right? Because the markets never really sell off in the same manner as they get bought. People are just so much more focused in buying and chasing rallies than they are selling them. And some people just never even entertain the idea of selling in the first place. But take a look. You begin with a drop. You have a panic rally. You have another drop, another failed rally, a bigger drop, another rally, and then a bigger drop. So on the road from this to this, which was like a couple percent points itself, you had one rally, 2 rallies, 3 rallies, and then the fourth was the one that really took off. So 3 different times the market tried to pick a bottom, ran with it, but that rally was a fake. It was a failed rally, and the market went lower. And that's what we'll continue to talk about here. But take a look at the very beginning moments. Even before that happened, there was a period here of about 2 weeks where this market didn't do much at all. It kept trying to break out on several occasions, even dropping and coming right back. But that's about 8. I'm just guessing, by the way. I didn't physically count that. That's probably 8 trading sessions, maybe 2 entire weeks, since there's only 5 trading sessions in a week. Went about 2 weeks just consolidating, just fighting back and forth sideways before actually going down. That's probably what you're going to see up here, is a struggle first, a series of drops followed by failed rallies, a series of dips that get bought but don't really make new highs. And there's a reason for that. And the reason is psychological. Markets always work in psychology. So there's a lot of people out there who missed this rally, and you might be one of them, or never got a big piece of the rally, or maybe you had it before and then you sold a little bit later, right? So maybe that's where you are, but people are going to buy every dip because it's a move like this that creates FOMO, fear of missing out. You want to be a part of this because you think in your mind it's never going to stop. And it will. And this is what we always want to battle, like when and where and so on. Now, we're going to wrap up this session, I think, here in just a couple of minutes. I think I got 15 minutes. I'm looking down at my clock. That's like 1 minute left. I have a tendency to ramble quite a bit. So for all the YouTubers here that came, that are visiting us for the first time, I want to thank you very much here at XM. But I encourage you to stay here and bring your questions to the table. Talk about what you're struggling with as a trader. Maybe you're not always struggling with a trader, but you're trying to go from one level to the next. You're trying to move to that next tier of consistency and professionalism. Bring those questions over. That's what we're here to do. XM only broker offering that kind of service where the education is free. Other places just feed you to the wolves. And that's why you hear these terrible statistics about traders not being able to succeed is because they're never trained. You're walking into a battle fighting people with 20, 30, 50 years of experience that know how a market works, and you're trading against them. How would you know? Right? Right, Boyke? How would you know? That's why we have these sessions, because we're here to teach you. So if I get cut off, guys, stay with me. Visit the XM live sessions here, and we'll continue to try to do our best to educate you and help you, take the next level as a trader. Now, that's probably what's going to happen here.